Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera everyone. Welcome to UMT Massive Open Online Course. I am Fatimah Shahman, your lecturer for today's class. By the end of the lecture, you should be able to discuss accounting issues surrounding accounting for aquaculture business. There will be 3 issues that I am going to present today. Firstly, I am going to explain issues on the recognition of revenues for aquaculture business. Secondly, I am going to discuss costing and cost accumulation of aquaculture business activities. And finally, I will explain issues in recognizing and measuring biological assets or aquaculture stock in aquaculture business. Okay, let us look at the first accounting issue, which is on accounting basis for income determination. There are at least 3 bases for determining income in aquaculture operations. First, total base. Secondly, project or batch of production. And thirdly, individual pond or cage. Each basis has its own advantages and disadvantages. Let's look at the basis for income determination in detail. Firstly, under total base, income can only be determined at the end of each reporting period by matching the total revenue with the total operating costs for the period, adjusted for changes in the opening and closing aquaculture stock. This method is simple to apply as costs incurred are recorded according to the nature of the expenditure. However, it is difficult to estimate the value to be assigned to the opening and closing aquaculture stocks. The reason is, the opening and closing stocks of aquaculture needs estimate. As in manufacturing company, the process is called stock take process. However, it is almost impossible for a business to count its underwater creatures by stock taking, isn't it? Therefore, estimates are required. A company cannot do a reliable estimate if it does not have a detailed costing technique in place. Secondly, under project base, income is determined by matching costs and revenues of each project as each production cycle is distinct and identifiable. If you can still recall from the topic 3.1, there are 3 stages in the production cycle of aquaculture business: procurement, growing, and harvesting. If the business can determine the cost and revenue for each stage, therefore, it is possible to calculate revenues using project base. It is also possible for a business to get revenues at each stage of production cycle. For example, your business sells shrimp eggs or baby shrimp from broodstocks, and thus sales start at stage 1. Some business will continue rearing until the shrimps get bigger, and selling activities happen only at the harvesting stage. Finally, the individual pond or cage basis, also termed as cost center base, measured income by matching costs and revenues of individual unit of pond or cage. This method is possible if the business can allocate revenue and costs to each pond or cage. Therefore, the application of this method requires high administrative costs to monitor performance of each individual cage or pond. However, this method does not reflect the business reality, that is, the production cycle of aquaculture business. Products generate revenue when a cycle is completed, regardless of the activity of each pond or cage. Which approach is recommended by the accounting standard? It is highly recommended that project base should be used to determine the income of aquaculture business because the method best reflects the economic reality. That means the reporting is in line with production cycle. As like revenues from agricultural business, revenues from aquaculture operations should be recognized at the point of sale. It does not matter at which production cycle the sales takes place. In most situations, sales takes place at the harvesting stage. That is, when the aquaculture stocks reach certain weight or age and ready to be consumed. However, there are also companies that sell fry and fingerlings or seed stocks. Therefore, revenues should be recognized at the point of sales. Accounting treatment for aquaculture stocks is a little bit different from those of agriculture. For animals living on the ground, like goats or cattle, we group these animals according to their age or quality, and we record increment in fair values due to the increase in size or growth. The similar case does not apply to aquaculture stocks. When the aquaculture stocks such as shrimp or fish grows or increases in quantity, the increment in value is not recorded. That means no revenue should be recognized based on the accretion of stock. I will talk about this issue in detail by the end of this lecture. Another issue relating to revenue recognition is related to production cycle. A production cycle may extend to more than one reporting period. However, the reporting and measurement should be done periodically. In this case, costs should be accumulated and capitalized as no revenue yet to be recognized or matched against cost. Furthermore, due to inherent risks in aquaculture business operation, an entity has to recognize foreseeable losses from operations on a timely basis. A study has shown that survival rates for prawns and fish are respectively 30 to 40% and 60 to 80%. I have mentioned this issue in a previous video in topic 3.1 of this course. In terms of survival rate, shrimp farming is riskier than fish farming. For example, shrimp eats each other. Furthermore, shrimp is exposed to virus such as white spot syndrome virus. The virus is deadly and it can kill shrimps quickly. Once infected, the whole pond is contaminated, and not only that, it can spread to all surrounding ponds. History shows that the virus outbreaks created millions-dollar losses to many companies in shrimp industry throughout the world. The virus can be transmitted from eggs to broodstock, from shrimp that eats infected shrimp, from birds, which can transmit infected shrimp from pond to pond, or even from seafood eaten by human. The virus can stay alive for at least 4 days. It can stay unnoticed in nails or skin of any animals or human being. Once it finds the suitable place, the virus will stay alive and damage the whole shrimp ecosystem. If affected, the business has to write off the losses. A business can simply declare bankrupt with a huge amount of losses. This is one type of risk that an aquaculture business is facing. The issue of risk management should be communicated to stakeholders in the financial statement. More importantly, if a business has to write off its stock, what should the items that should be written off to? Should it only be the shrimps? or will it include all costs associated with the production of the shrimp, such as direct labours, feeds and applicable overheads? Another issue in regards to aquaculture business is costing and cost accumulation. It becomes an issue because production cycle and reporting date may not be similar. Stocks are sold during the harvesting stage. However, the accounting period ends during the growing or transformation stage. Therefore, all the costs should be accumulated and capitalized as assets. In manufacturing company, if you like, it is termed as work in progress. However, in aquaculture business, we consider all works in progress as values of the stocks. Cost of stock comprise aggregate costs of material inputs, cost of transformation, direct labor and production overheads, cost of managing the projects, and other costs incurred in nurturing the species cultured to their saleable condition. These costs are traced to cost units or centers. Identifiable cost units are units or centers in which product costs accumulate, and they serve as the basis for stock valuation purposes. It is based on the principle that each unit is capable of being measured and identified separately, whether done on a pond by pond, cage by cage, or on a batch by batch basis. As a minimum requirement, accounting standard requires the following items to be taken as part of the cost units, totaled up as cost of aquaculture stocks. A. Variable material costs, such as seed stock, feeds, fertilizers, medicines, etc. B. Direct farm labor, such as wages of farm workers. C. Direct fixed costs, such as depreciation of ponds, cages, generators, pumps, boats, etc. D. A reasonable allocation of indirect fixed costs, such as depreciation of common pumps, canals, gateways, salaries of supervisors and technicians, etc. The cost of stock should include a systematic allocation of these production overheads because they are considered to relate directly to putting the stocks in a saleable condition. The allocation of fixed production overheads should be based on the normal carrying capacity of the culture or operating system. The normal carrying capacity in aquaculture operations can be partially changed by husbandry practices. Therefore, to make sure that stock valuations includes an allocation of fixed production overheads, the normal carrying capacity shall be determined in advance. Right, the following slide shows us an example on how the allocation could be done. The following steps demonstrate an example of how fixed production overheads may be allocated. Firstly, specify a normal carrying capacity, for example, annual production of 5,000 kilos. Firstly, specify a normal carrying capacity, for example, annual production of 5 million kilos. Estimate the total fixed production overhead, depreciation, salaries, etc. Thirdly, analyze application or absorption rate per unit of output. Fourthly, apply the analyzed application rate to production cycles or identifiable cost centers in production process through an overhead application account. And lastly, control actual fixed production overheads, incurred in an overhead control account, and at periodic intervals, variance between overheads incurred and overhead applied are prorated to cost of goods sold and closing stocks. Right, the final issue that I want to discuss today is about stock valuation. Before I go on to the details of the stock valuations, let us be clear on one related issue, that is, what is biological assets of aquaculture business and how to measure them. According to accounting standard, a business can use cost or fair value to measure its biological assets. However, as in any accounting treatment, to appear in financial report, an item should meet recognition criteria prior to measurement. So, biological assets of aquaculture business are underwater living creatures that can provide future economic benefits to the business, and the business can control the creatures. Control here does not refer to legal ownership. Ownership can be in substance rather than form. For example, you have a license to rear marine fish and build up cages in a marine site which belongs to the government. The fish in the cage belongs to your business, so you have full control over the fish. You can breed them and harvest them. Therefore, the fish is your biological assets. The next criteria is whether the cost of the fish can be measured reliably. If fair value can be determined, accounting standard prescribes the fair value measurement. However, an obvious issue with fair value measurement is the value depends on the market. It is not an entity specific. It is volatile. It fluctuates based on many factors which are beyond the control of the business. Adoption of fair value will make the profit volatile. Business owners would not like it. Remember, business owners are facing with the inherent risk, i.e. high mortality rate of the stocks. As illustrated earlier, issues like natural disaster, flood, virus, and the like can significantly affect value of the biological assets. The value can be written off to nothing just overnight. For these reasons, business owners use costs to measure their biological assets or stock. As I mentioned earlier, biological assets of aquaculture business can be measured at cost. All costs should be accumulated, and that will determine the cost of the aquatic animals. Say, for example, you are selling shrimp. How do you determine the value of 1 kilogram of shrimp? Yes, you should calculate all costs needed to breed the shrimp from procurement until harvesting cycles. The aquatic animals are measured at cost. However, it is important to note that aquaculture stock also changes in its form and quantity in transformation phase. Therefore, net realizable value of the aquatic stocks should be estimated. What is net realizable value, or NRV? NRV refers to the value that is expected to be realized when fishes or prawns are ready for collection on the reporting date. The estimates of net realizable value should be based on the most reliable evidence available as to what the stocks are expected to realize upon completion of the cycle. So now you have two choices of values, cost and net reservoir value. Which value should we use to measure aquatic stocks at the reporting period? The accounting standard provides that aquaculture stocks should be valued at the lower of cost and net realizable value. That means we compare these two values and then choose whichever is lower. Say for example, the value of your 1 kilogram of shrimp is 20 ringgit at cost. Net reservoir value is 30 ringgit per kilogram. Which value should we use? Yes, we should take the lower value, that is 20 ringgit per kilogram. However, what if the net realizable value of the shrimp is now 10 ringgit per kilogram? Many things can happen in the market that bring down the market value of the shrimp. For example, white spot virus outbreaks. In this situation, although the shrimp that you are farming has nothing to do with the virus, stocks should be written down to net reservoir value. Loss should be recognized and then charged against profit and loss statement. To summarize, you have learned several issues in regard to aquaculture business. The most important issue is about recognition and measurement of stocks or biological assets. Additionally, issues on basis to determine income also warrant significant importance in this topic. That's all for today. The next video, we are going to learn about the disclosure requirement for aquaculture business. See you next time. Thank you. Bye.